Good morning, everyone. How's everybody doing? Let me know if you guys can hear me. What's up, Jiraj? Hey, Cisco. Raj, how you doing? Hey, Doc. Good morning. Good morning. All right, here we go. Wednesday, the 11th. Hey, Dano, Alexander, Badir, how you guys doing? Okay, so we are in a holding pattern. Overnight inventory was long. It's correcting lower now. Value area, right? The value area is just a fancy way of saying the cost basis. So pretty slow night. It looks like margins are increased. So it's what is it? $500 to trade the micro and 5 grand to trade the mini, right? At certain places, right? So yeah, it's $594 to trade the micro, $5,900 to trade the mini tonight. If you're trading at places like AMP, right? They're like the canary in the coal mine. They tell us they're always watching risk. They're always watching risk. Okay, so we have those single prints from yesterday. Just want to show you that some of them filled, right? But there's still 67.65 all the way down to that 67.40 level. Thanks, Alexander. Yeah, so it's expensive to trade tonight. So you'll have a few, a little less action. Inventory starting to correct lower. We'll be looking for 67.88 and 3/4. All right, we had, from our big liquidation, we have inventory underneath 67.65. It's being sold above. So the nice thing about these market profile charts is they show you where the stuff is priced. You see that, and then these little bits here. They're being sold here, here yesterday, and here. So you can see this is the path of the inventory. So if we get into trouble and we got to put it on sale, we're going to come back and test yesterday's low. Make sense, guys? Pretty simple. So inventory short term is above us. So we're looking for that movement lower, right? So first of all, when you see the inventory is above you, you're looking for movement lower. That means you should be very careful going long, right? So if you're going long, if you're doing a look below and fail, now I've done the levels up. See, we did have a short position here between 6,800 and 6,805. That has been filled now. So the shorts told us, hey, guys, they're selling. Let's drop our buy orders. And we'll be looking for 67.88 and 3/4. which is right where the low of this period, this U period is. So there'll be a stop right there. And if you're short, that's going to be your target. Make sense? So that 89 area is where we're going to be looking for the first bid. Hey, Marcus, how are you doing? Marcus, let me know today what time you want to do your thing. Reach out. There we go. There's 67.88. Now, traders who like to buy the dip, I'm a little slow, you guys, so you'll bear with me. Oh, let's see what happens once we get down here. Oh, what am I forgetting? Our overnight low is before, you see this M period low? That's where everybody got caught short at the end of the day. Under 67, 60, 67, 67.79. So the overnight low, this is, they front ran that area and they came in and the market went up. So on retracement, the next stop will be at 86, just under 86 here. And we're going to come and test that next stop. And then we'll be looking for 84 on the downside. So you can see there's no look below and fail of 67.92 half. I'll look for a look below and fail of 67.84. So I better open up my other Sierra so I can trade. And it's just drop it in. If you were short under VWAP, if you were short at 68.04, 68.01 on that inventory correction, you know, you're looking. So you're going to just keep dropping in, dropping in. The only buyers are short sellers, right? So that's the problem in a market. When your buyers are short sellers, they're not reliable, right? Because they're going to run away the first chance they get, right? They're going to have their buy orders in there, and as soon as they see a little size coming at them, do you guys understand the concept of size coming at you? So in the old days, what I'd do if I was short a market, or if I was making a market, I'd have my market maker go and put an order here, right? And I'd call, like we used to have this market maker called MPAC Capital out of San Francisco. We used to call him 2-pack. And I'd yell out to my trader, I'd go, hey, put 2-pack up on the bid at $5 for 100 and a call, which means tell that market maker to go $5 bid, buy 100 shares and a call, which means when that bid gets hit, he's going to call me and tell me who hit him and what they showed him, right? You guys ever hear the term sizing a market? Hey, folks on YouTube, right? So that's how we used to do it in the old days. Now, you can't have a market maker go up in the ES and tell you what's hitting you because, first of all, you can't talk to them. Second of all, it's all automated. So how do we use that lookout bid now? What we do is we watch a level like 67.84. And if the market looks below and fails, then you know the size was small. The sell orders came underneath and then pop back up, right? If it hits it with size, it'll take out 84 and continue down to 82 and then 79, right? So in that old, what we used to do, you know, he would call me, he'd go, JJ, Citadel hit me for 5,000 shares at $5. And I go, buy 100 and tell him to piss off, right? So he'd buy 100 shares at $5, and he dropped his bid, right? So Citadel had to go hit the rest of the bids to get rid of their order. See, look at that. There's that look below and fail. You see, if we had big size coming in and hitting that level, right, you wouldn't get that responsive buy, right? You wouldn't get that responsive buy. So if you're buying 84, 85 on this bounce, you know there's going to be a seller at 87. So go put an 86.5 offer out and see if you can get a fill. If you can't get a fill, like I bought 85.25 and I punched out at 86.25, right? Just on a couple of points just to see, because I know there's going to be a seller here, right? And this is how you trade intelligently. Now, if you want to hold it for longer, give it a little while and see if the next candle stays above 84, right? This is the look below and fail. It looked under 84. The sellers don't have to sell under 84. They raise price, right? But we know that there's inventory above us because the market just sold off. So they're going to be trap traders at the top of these candles, right? So if you bought 84, 85, right, 84.5, 85, 85.5, go put a sell order out here, right? You see how they're front running that level? Right? And it might take some time to go back and forth because margins are increased and it's a bit of a slower night or morning. Does that make sense? The trades that we take, my friends, have to make common sense. Okay? There's nothing random. See how the bottom of these candles can't take out 84? Do you guys see that? Look, bottom, bottom. Don't worry if it's a wick or a twick or a bwick or all that crap. Just look at the bottom of the candles. Boom! There you go. So if you're still long a few contracts and you're long at 85.25 and you sell at 87, right, then put an offer above 87 and see if that gets taken. But right now you're backfilling, right? So we knew there was going to be a seller there. Did you see how easy it is, right? You don't need a math degree to draw a line at the top of the candles that are going down to know that there's going to be sellers there. Guys, let me know if this makes sense to you. Because everyone is rooting around trying to figure out this whole trading thing. But if you actually look at the simplicity of the business, right, it's a lot easier to deal with this and then build an execution model around it. So your execution's based on reality. It's not based on fantasy, right? Now let's see. Look, we got to print a little higher. See? The next seller is going to be at 88.25. It's okay. Sometimes you might miss a trade, VS. It's okay, right? This is the first trade I took this morning, and I'm kind of foggy mentally this morning. So, a couple of points here on a couple of contracts is just getting my brain kind of kick-started like an old motorcycle, right? Watch the offer now. Watch the offer at 87.25. There's a little competition there, but it's not aggressive, right? You don't get that big red hammer candle down, right? See, there's sellers competing at 87.25, but there's buyers, so they don't want to scare them away. Right? And the algorithms are so finely tuned now that they sense the order flow and react to them instantaneously. Look at that. Look how beautiful that is. So, they front ran the overnight low. This is where the shorts were trapped yesterday at the end of the day. This is where the shorts were trapped when the market opened in Globex. This is where the shorts are trapped now. 3 different time frames. So if the sellers are desperate and need to lower prices to get rid of their inventory, then they will lower price. Because they have to. Right? If they don't lower price, they don't get rid of their inventory. Did I take the look below and fail? It didn't actually look below and fail, Rocky. I took the look below and fail of 84, right? Because it didn't do this. I was waiting for this, but it didn't do that. So I did this. So I was long 85 and a quarter, selling into the 86 halves. Not the greatest trade, but I'm just, I did it with the micro. I'm testing to see whether or not my brain is working. Make sense? So I know that there's a bid there. Now let's see if that bid holds. You see how it's chopping back and forth? Because what happens is the short sellers come in. I love the look below and fail of the overnight low. I love that trade. It's a great trade because there's always bids down here, right? There's always buyers down here. So it looks though the buyers come and compete. What the analogy is, pretend this is the door of Walmart and it's Black Friday. And everyone's pushed up against the door. And as soon as the security guard opens that door, it, boom, you get that push back up as everybody bum rushes and pushes in to get cheap product. Because this level is where the cheap product is. That's where the shorts will be. They'll be sitting there like hungry dogs, waiting for a piece of a sandwich to fall off the counter. Right? There you go. You see that back and forth chop now? The candles are getting slower. So what happens on a liquidation? The first thing is shorts come in and cover. Then longs build a long position on top. Then we come in. Now the dumb money shorts that short here, if enough people short here, you'll get a move up. And your next target will be 90 and a half. So if you're a larger trader and you're building a long position here, 85, under 85 is your warning level, right? Like the song says, danger zone. That's your danger zone. There's your stop. Say you're long 10, 20 contracts between 86 and 87. Put some sell orders out. Boom, 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 boom. Off you go. What did I tell you? I told you this was happening, right? There you go. How could you tell? The candles, the lows are getting higher. Boom, 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 boom. The bid's following the offer, right? Like a good obedient dog. So if you're long 86 on 10, 15 contracts, sell some at 88. Sell some at 87, 88, 89. You're making sales. You're making money. You're turning inventory into cash. And that's how you make a market. There you go. You know there's going to be sellers at 90 and 3/4. So sell 89 and a half. Take the money and run. So if you had bought 5 to 10 contracts between 85 and 86, maybe a little high, you paid a little strong 86 and a half, 87, right? You're blowing it out at 89, 90. These are great sales. Smart business, right? Now, what was your risk? Your risk was 84. The trade would not make sense if the market went under 84 and you'd get out of your position. Very simple. Boom, there's 90 and 3/4. And if enough people shorted it under 87, it's going to rip up to 92, 92 and a half. Trading is simple. Dear God, it's not easy, but it's simple, right? Everybody who overcomplicates this just does nothing but lose money. You wait for the edge where you get the best deal, right? These people talk about value area but they don't use common terminology that people understand, right? If you use the word cost basis, if you replace the word value with how much did you pay for your shit and how much are you selling it for, the difference is profit. People would understand that. There's 92 and a half. Thank you very much. Beautiful. There you go. Why would you overcomplicate this? Why would you be looking at delta divergence and flatulence and gamma, beta, meta, phi, beta, kappa, all that crap? Why would you be looking at that? That is a beautiful rotation. So simple, Not easy, and you're going to have to practice it, and you'll screw this trade up a bunch of times before you get it right. But, folks, that's life, right? That's okay. I sold too soon too, Joe Baba. Hey, it's okay. It was my first trade of the morning, and I'm just barely getting through this cup of coffee, which is very disappointing. You know, my girlfriend had me buy one of those fancy machines, and you know those pod things, you know, the George Clooney coffee machine, but the coffee just tastes like chemical water. It's like not like the coffee you get in Spain or it's very chemically. Sorry, but I digress. There's the look below and fail. Picture perfect. Picture perfect. You know, and it's okay. Couple of points here, a couple of points there, they add up. Yeah, you're right, Joe Mo. Right. Oh, you just went to China. Very cool. I've been watching a lot of China videos on the cities there. Fascinating stuff. Amazing. So, had you been a little bit more dialed in and you had bought 5 or 10 contracts, say you're a little bit of a larger trader and you went long 10 here, you know, you sell two, 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 and you could keep, you know, you could sell those twos all the way up. Get paid, my friends. Get paid, get paid, get paid. That is, you just witnessed the classic look below and fail. Remember I said let's not go long 92, let's wait till 84 so we get the best discount. Oh, Kona coffee, yeah. That's amazing stuff, Dano. Yeah, oh, I don't know, old George Clooney, man. This stuff tastes like Dow Chemical coffee. Okay, I'm gonna shut up about the coffee. If this isn't JJ reviews coffee machines. Ugh, it's just disappointing. With all the inventory above us, so a lot of selling pressure, why the shorts just buy at the low? Can't they wait and go lower and get a best price? That would be, Muhammad, that's the fantasy trade, right? The fantasy trade, brother, is to get the best price. But the only problem is if you're a short seller and you have to cover 1,000, 2,000, 5,000 contracts, and there's 300 other people who have to cover a couple of thousand contracts, that creates price competition, right? So you gotta, that's the problem with trading size. You've got to cover where you can, not where you want to. Does that make sense? So if I was short, say 97, say I was short 500 contracts from 97 down, and I got to cover between 85 and 88, that's good money, man. Do the math. Then you're on to the next trade. You see, unlike us, size traders, right? They don't they don't look at this like we look at trades. We look at trades like, "Oh my god, this is the last trade I'm ever going to take. I'm going to take this trade and I got to make it last 30 points cuz in half an hour I'm going to have a heart attack and die." That's how retail traders trade. It's going to be the last trade. They're going to take away my computer. Size traders are in and out and in and out. Make a little here, make a little there. Now I had this old Italian client. His name was Ezio, and he used to tell me, "Hey kid, this guy was a ruthless paper hanger, right? He was ruthless. He would make millions and millions of dollars, and the only thing he had any sort of compassion for was animals. So he'd like make $1 million on a deal, and then he'd go and drop like 200 grand at animal shelters all over North America, right? And pay for dogs to get operations and stuff, right? He had no compassion for people at all, but animals. And he used to always tell me, he said, "Listen, kid," he was like, Don't be greedy. A million here, a million there, it adds up. You blew $100,000 account on MNQ? Holy shit. Well, was it? I hope it wasn't your money. I hope it was a funded trader account. Flex, if you want some help, reach out, man. I'll make sure you never do that again. Oh, it's funded? Okay, well, still, blowing up accounts, I don't mean to sound like an asshole, but blowing up accounts is just not acceptable. Um, if you want some help, join our room. I'll teach you. I mean, I've never blown up an account in my life because in my business, if you blow up accounts, you're unemployable, right? Because the people who own the brokerage firms like this idiot doesn't know how to manage risk, right? They like you'll never get a job, right? Oh, they don't give you that much money to blow, Joe Mama. Like I'm sure the funding company didn't lose $100,000. So if you want to learn Flex, we got a 3-day trial, man. If you're tired of losing money, if you're tired of trading in the wrong direction, for your case, the fact that you blew up an account trading Nasdaq means you have no frickin' business trading the Nasdaq. You should trade the ES. Nasdaq is a much more sophisticated, thin market, and you should not be trading it. That's like giving. Honestly, the Nasdaq is the worst market to trade if you have no risk management. Right? You'll destroy yourself. Now, it's okay that you blew a funded trader account because if you lost 100 grand, man, that's crazy. Of your own money, Jesus. But I've seen people do it, and thank goodness for those funded trader accounts. Right? So obviously you were trading without stops, right? Not trying to embarrass you, I'm trying to help you. So come into our room, have a chat with me, and we'll deprogram you. We'll get rid of all the crappy, shitty information you've got in your brain. We'll flush that out. We'll put proper trading knowledge in there, and we'll do it for $19 a month. So, the thing you got to ask yourself, are you a person who loves to lose money and blow up accounts because you like the drama? Some people like it. Or do you actually want to make a living doing this? Come see us. We'll help you turn it around. I'll help you turn it around. All you have to do is you just need the ability to pay attention. Right? If you can pay attention and do what you're told, I'll make you profitable. Wow, shorts are really trapped there, right? Boy, oh boy, look at this. So folks, that's what's called an inventory correction. Inventory was long, it corrected lower. We found the bid right at the overnight low. Bing, bang, boom, right back up to 69, 67.98. You know? And that goes for anybody out there who's having trouble trading. Trading it's not easy. This is not at all easy. Because most of the time you're trading a market, number one, that you should never be trading. Right? They should have a ring around the Nasdaq and tell people, look, like those rides, right? Yeah, hit me up, man. 3 months? Oh, great. That means you don't have that many bad habits. Beautiful, right? If you've only been trading for 3 months, that's perfect. That means I don't have to deprogram 10 years of bad info. Yeah, there was right. That was a nice little one there too, Cisco, right? It's okay, VS. You're just getting, you are just getting comfortable with that price action, right? You're just getting comfortable and you're building that database of price action in your head where, oh, I've seen this before. Oh, I've felt this before. I know what they're going to do now. That just takes a little bit more experience and it's coming. So don't worry about that. Yeah, it's this market. My God, this market is something else. You know, we'll see. We'll see what happens. The 4-hour candle wax chart. I'm just gonna zoom out for a little bit. This 4-hour chart is showing us that you know we've got sellers at 68.29, and for the last, geez, here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. You know, there is just sideways. What does that mean? Well, we have all this inventory that we picked up under 66.80 and we're selling it here. Now, the shorts are trapped under 67.59 and they're holding the market. That's called providing the bid, okay? So the shorts are trapped here. So what we're doing is we are taking the cheap crap that we bought here and we're selling it up here. And we're using those shorts to hold the market up. So for longer term traders, you need a break of 67.71 and to take the bottom of these 4-hour candles for all of this candy to fall out. Right? The problem in this market is the order flow, because there is a war. The order flow is not really reliable. Right? It's a little, we have a saying in Canada, it's a little haywire. Right? The order flow is a little haywire. It's a little nuts. Right? The market kind of fell on its head. It's a little dizzy. It doesn't know what to do. All the analysts, they were pricing their models for the tariffs, and then all of a sudden you guys started bombing stuff. So the market's it's a little nervous, right? So big money, when stuff like that happens, what is big money? They just pull back. They pull back they pull back their money. They pull their money off the table and they go, okay, well, we own Microsoft at $40 a share and we own 200 million shares of it at $40 to $50. We'll just sit here. It's at 400. We're fine. We're holding it for 30 years anyway. So you guys fight it out, and when you guys finish fighting it out, tell us, give us a heads up. In the meantime, you get speculators, right? You get speculators. This is all speculative money, especially at 3 o'clock in the morning, 4 o'clock in the morning in New York. This is all speculative money, okay? And there's nothing wrong with that, but you just have to recognize the market that you're in and the people that you're dealing with. And right now we are dealing with speculators. So that means we need to get in, out, and get paid. Another look below and fail of 67.92.5. Sorry, I missed that one. See how we did the same thing. These are great trades, my friends. These are really, really good trades because the market comes down, the sell orders come down, the sell orders finish under 92.5, and then the market rotates back up. So you go long 93, 94, put your stop at 92.5, sell 97, sell 98, sell 99, right? Make a little scratch, and you're done. Life is simple. Another 4 points. That's a beautiful thing, my friend. I'll take 4 points all day, every day, and say thank you very much. 4 points on one contract is $200. On 4 contracts, that's $800. You do that trade once every day, that's a $16,000 month. And you're not sweating. Right? You're not sweating. Well, go grab yourself a coffee, Joe Mama. Right? I'm not sure where you are in the world, but grab a coffee, chill out. Put on a little smooth jazz, relax. Chill. You got to be relaxed when you're retail trading. I still remember, all these young guys, they'd just be pounding down energy drinks, blowing up accounts. You just want to relax, be calm, be chill, let the trades come to you. It's all good, right? Yeah, the other thing is, as soon as you make a little bit of money, get it the hell out of your account. I am a huge, well, this is how the business works, right? Now, I've never wired money into a brokerage account. That's that's like a heretic thing to do, right? Brokerage accounts aren't meant to wire money into, right? I've done it when you start a futures account, but generally what you do in a brokerage account is you put stock in the account, you sell it, and you take money out. That's how that works. You'd never wire money into a brokerage account. Brokerage accounts are meant to wire money out of. So say you're trading a prop account and just get payouts. Get those payouts, get those payouts. And if you're trading your own money, get it the hell out of your account before your greedy hands get their hands on it. You know what I mean? Get the money out of your account. If you make $1,000 this week, get it the hell out of your account. If you make $500 this week, get it out of your account. Don't try and grow it. That's a fool's game. These people who say you should compound and try and double your account and all that, don't do that. It is a fool's errand, right? Brokerage accounts you should be taking money, you should be asking for a weekly wire. Always wire out, wire out, wire out. Get used to it. You know why? Because the money's not yours until it's in your bank. Right? When it's in your brokerage account, your ego is going to get its hands on it and it's going to blow it up. You're going to go, "Oh, I made $500 this week. Let me double it before Friday." Boom, it's gone. And you're probably going to lose another 500. You know? Get used to paying yourself. Right? A little lecture time. This is the reason why retail traders fail, because they're not used to getting paid. They are used to losing money and they're conditioned to lose money. So when they do make a little bit of money, they automatically give it back because they're conditioned that they should lose money. Right? If you start paying yourself even $100 to $200 a week, every Friday you're going to be expecting that money like a paycheck, and you're not going to do anything to screw it up. Does that make sense? You have to condition yourself to act like a business, right? And you have to get the money out of your brokerage account every week. What's my backstory? 34 years in the business. I've taken 200 companies public. I've traded for every high-functioning sociopath and criminal out there. I came up through the sewers of the penny stock industry in Vancouver. I traded for all the people from the Wolf of Wall Street and worse. I've traded for criminal organizations, Saudi Arabian arms dealers. I've short squeezed stocks from 30 cents to 25 bucks, $3 to $300. I'm a bit of an anomaly. I'm not the usual trader that worked on the floor or something like that. So my clients, they never said, "Hey JJ, should I buy Microsoft?" Do I have a week exactly? My backstory, right? So I was the guy that you never hear of, that you never see. When you're buying a stock at $5, my clients own it at half a penny, and we're selling millions and millions and hundreds of millions of shares into the market. So you buy a stock at $5, we sell it down to 3, we're still making money. My clients are the people who take companies public, who finance public companies. I'm an inside guy. I've never paid for stock in my life. You get it for free. Very different story. So what I do is I take street smarts and combine it with how the business works to teach you guys how to make a buck. Everything I do is practical. Where do you take the trade? What's the business reason for taking the trade? Why do arms dealers trade stocks? Because it's a great way to move $200 million around the world without anybody knowing. And also, you can make a lot of money. Wouldn't you like to make $300 million in a week, Mohammed? You can buy a lot of, I don't know, whatever the hell arms dealers buy, right? You can buy a lot of bullets, right? If you make $300 million in a week, right, it's a good way to finance your business, isn't it? Right? So that's how. So I traded for, say a hedge fund. A hedge fund, say they make a lot of money. They don't make money from picking stocks. They make money from financing companies. So if a stock's trading at $5, the guy who gives the company 10, 15, 20 million dollars, they get their stock at $1 and then they sell it at 5. So they've already got a baked in discount. It's good to have you here, Flex. Yeah, this is a no BS room. What I do is I want, because, and the reason my backstory, the reason why I'm not doing that anymore is because I had a heart attack in 2012 and died, came back to life, had a quintuple bypass, and I had to find something to do that was a little less stressful. So I thought retail trading would be easy, and oh my God, it was the hardest thing I've ever had to do because you need discipline, you can't cheat. It's like being in a war with a plastic spoon. You don't even get a plastic knife when you're a retail trader. So you got to be quick, you got to be sharp, you got to be shrewd, you got to be sneaky. So I teach you guys to think like a villain, think like a criminal, get the money, right? Rob the bank, hit the cash drawer, don't go for the vault, wait for the next bank, right? Make a little money here, make a little money there, it adds up, and then I want you to keep the money, right? I want you guys to get paid, and I want you to keep the money that you make, right? It's what drives me crazy is to hear people lose money, especially when I started before funded accounts. Let's see if we can take out that 6,800 level. Do you see? We have, look at this, folks. This is beautiful. Check this out. Accumulation, distribution. That distribution is going to bring buyers because that price stability brings buyers. If that price stability brings buyers, we're going to be looking for 6807 to the upside. Let's see. Oh, we have to get past VWAP first. VWAP's the goalie, right? That's like Ken Dryden in net for the Montreal Canadiens, if anybody still remembers that hockey reference from the 70s. Yeah, so I didn't go to Harvard. I didn't go to Wharton. I should have, but I wasn't smart enough. I was a bouncer who had gotten 4 years of microbiology. I was too stupid to get into med school. So I was working as a bouncer, and one of the traders from the Vancouver Stock Exchange gave me a book called Liar's Poker, which was written by Michael Lewis. It was his first book. He's the guy who wrote The Buy Side and The Big Short. Liar's Poker was his first book. I read that book and I was hooked. And then it took me a few years to get on a trade desk. It took me 4 years, but in that time I got clients and I learned the business. And yeah, I had about 200 clients when I started on my. I didn't know how to trade at all, but I had 200 clients who would do nothing but sell stock. So that's what I did. Vancouver was offshore for the U.S., so all the U.S. promoters traded out of Vancouver. Like my first account was a Swiss bank. My second big account were large stock promoters and, you know, um, stock promoters, hedge funds. Like say you need, like you have a hedge fund and you have a stock position and you've made a deal with the other hedge funds that you don't sell but you want to sell and you want to sell secretly, you'd call me and I'd route the orders all through the world so nobody would know where the selling was coming from. That kind of thing, right? Or if you have a company and maybe two or three of your partners, you all own stock and somebody's got pressure on the stock, somebody's selling all the time, and you need to find out who's selling, you call me. I do something called forensic trading, which is, you guys have never heard of forensic trading. That's if you want to find, if you got a leak in the boat, call JJ, I'll find out where the leak is coming from. Usually takes me about 3 minutes. So yeah, that's what I do. And now I teach normal people how to make a living. Like right now, there's no trade. See how choppy it is? See how the candles are small? Right? This is distribution. Right? We're selling the cheap crap that we bought down here up here. And if we go like sideways long enough, that'll bring in buyers and we can come and tickle VWAP. But if that doesn't happen, we'll come back down and test 92 and then this level here. Yeah, so everything we do is based on common sense, simple, common sense, and the business. So all our trades are based on, when you take a trade, there's a business reason for taking the trade. So if we had gone long here, right? If you'd gone long at like 62.93, 94, right? That's the business reason, is the sell orders are done under 92.5. So your risk is at 92.5, right? So you're long here, your stop is here, right? So the business reason is you're going to take that 92, 93, 94 inventory and sell it up at 96, 97, 98. Now, if somebody comes and offers it under 92, that business doesn't make sense anymore. So you get out and you save your money. This is the only business where you can insure every business transaction. So you get a portion of your money back if things go wrong. See, like, watch that offer. Let's see if it's creeping, but who was saying there's going to be sellers at 6,800? It's a big, nice, round, fat number. So there'll be a lot of orders gathered around 6,800 because there's going to be a lot of sellers at VWAP. So if you were smart and you owned inventory here or here, and you know that there's going to be sellers at 4, you're going to come in and you're going to front run 6,800. Front running means you know that there's going to be a seller there, so you go and you snake the buyer before the seller can get to it, right? Because if you're long 67.88, you could still sell 96 and make a profit. You don't have to worry about those other poor points. You're still in profit. And when you need to move size, you don't care about price, right? You don't care about nitpicky little details like a couple of points here or there on 1,000 contracts because there's competition. Right? Price goes down when there's selling competition, when the sellers have to sell to get out of their product, to get out of their inventory. So that's what we try and teach you in our room. We try and teach you how the business works and how you can take advantage of it. That's our focus. Yeah, so folks, come check out the room. We've got that 3-day trial. We also have a beautiful AI tool. Our AI is actually, it's been trained by actual real traders, so it's not like Chat GPT, like these other AIs, they're like vacuum cleaners, and they'll go and grab information from all over the internet. Ours has been sort of curated or taught only from trusted sources. See, here we go. We ran out of buyers at 96, 97, 95, 94. Now we put it on sale back to 92.5 again. Now, if you're thinking of doing the look below and fail, now you've got inventory above us, right? We suckered all these people into buying 94 to 98, so there's going to be a little bit of selling pressure. We might not pop back up as quick. Let's see. If we do, that means there's quite a good amount of short buyers underneath 92. And as soon as they came to 92, they came rushing in. That's not bad. If you had gone long 93, 94, sell 96, couple of points, I wasn't expecting that. I'm starting to get the opinion, and Raj, I don't know, I'm starting to get the opinion that there's a lot more people short in the last couple of days than I thought there is. there, there could be a larger short position than I thought there would be. I think I think that that little, when the president came out and said that the war is over or it could be over or something like that, I don't know exactly what he said. I think that caught a lot of people with their pants down. Yeah. Because everybody, when we came down and we hit that 200 MA on the whatchamacallit, on the daily, I think a lot of people are short underneath that, and then they added to it on the way up over the last couple of days, and that's why we're getting these covering bids. Let's see. Let's see. Yeah, that's a bigger response in the last 2 minutes than I thought there would be. Gee whiz. So now you guys know, write it down in your book. There is a short bid under 92 half, right? So now you know where the bid is, right? Once you know where the bid is, your life changes. Because if you're short and you short down to the bid, then you can cover at the bid because you know that's where the buyers are, right? And that's where you can go long. See, that's how traders would, this is what traders would do in the old days before all this stuff. They would short the market down to where the bid is. And then when they found the bid, they just cover their short, turn around and go long, right? Very simple, right? Now, the execution of that, of course, is not easy, right, my friends? It's easy to say, it's harder to do, but hey, that's why you want to get paid the big bucks, right, for having skill. So, you short the market down to where the buyers are, cover, flip and go long. And that's what traders have been doing for centuries, literally centuries, right? All of this stuff is not new. It's automated now, so it's more efficient. Algorithms just make the market way more efficient. Right? They allow you to trade faster, right? Remember, it's a market. So what is a market? You deliver a product in a market, right? Here we're delivering ES contracts. So the algorithms make the delivery of those contracts very, very efficient. Just like robots in a factory can work 24 hours a day. They don't take coffee breaks, right? Neither do algos. That's why they replaced human market makers with algorithms, because they're cheaper and, they don't get arrested and you don't have to bail them out of jail at 3 in the morning like regular market makers, right? They don't get into fights in bars, right? You know, so it's a lot more efficient. It's a lot, they execute 300 trades in the time it takes a human being to do one. See? Efficiency. That's all algos are. Oh. Any questions? Yeah, the whole AI thing, that's a whole new thing too, Dave. See, distribution. Any questions? Come join us at the Trading Syndicate, folks. I promise I will make it worth your while. We'll teach you how to make a living. Oh, before I forget, today at 11 o'clock Eastern time, we're going to be doing an execution workshop. And it will be recorded. If you can't make it, isn't AI going to change the nature of the market behavior and make it more difficult to trade manually? It might, Bernard. But you know what, Bernard? Human beings have been adapting pretty much since cavemen, right? So whatever it is, like when algorithms got really popular in 2016, it was very hard to trade. I took a month and I didn't trade and I sat and watched. Um, it might. So far, nothing yet. We'll be on the lookout for it, you know? But doesn't mean we can't make some money in the meantime, right? This business is not an easy business. There's that bid again at 92.5 if anyone's interested. No problem, Risco. Good to have you with us. Right? This automation, Bernard, it just makes markets really, really, really exact. So if you could buy like 93, 94 and put your stop at 92.5 there, your business expenses are cheaper. So I'm one of these old traders, and I've been in the market for 34 years, right? There's a lot of the old guys like me who hate algos, who hate automation. I think they're wonderful because they lower our business expenses. See, your stops are a business expense. So instead of going and buying 93, 94 and putting your stop at 90, you can put your stop right there at the bottom of that candle. Beautiful, right? In at 94, out at 95, 96. There you go, VS squad. You're cooking with gas. Long 93, out 96. Beautiful, Dano. Beautiful. Right? I'm an optimist. You can't be in this business and not be an optimist. Thanks, everyone. Have a wonderful morning. We will see you at 9 a.m. Eastern Time, which for my folks in the UK and Europe is instead of 2 o'clock, it's 1 o'clock, and instead of 3 o'clock, it's 2 o'clock if you're lucky enough to be in Spain or some beautiful place like that. Have a wonderful morning. Be safe out there. Don't take candy from strange market makers. And we will see you for the pre-open at 9 a.m. Eastern Time. And then remember, folks, if you join the room today, it's free, right? You get he's going to give you 3 free days or something like that. Worst case scenario, you pay 19 bucks for 1 month. We have our execution lab at 11 o'clock Eastern Time for the people in the room. I'll put the Zoom link in there. Have a wonderful morning. Come learn how to trade. No gibberish, no double talk. We'll teach you straight goods how to do this. Thanks, everyone. Have a wonderful morning. Appreciate you guys and ladies. Thanks for being with us. Yeah, you got to have a laugh, Dave. You got to have a laugh. You got to have a sense of humor in this business. That's for sure. Thanks, everyone. We'll see you in a little bit. Bye for now.